arrived there just a few years ago.
WHK, Cleveland.
Past performance may not be indicative of future results. Therefore, no current or prospective client should assume that the future performance of any specific investment strategy, including the investments and/or investment strategies recommended and/or purchased by advisor, or product made reference to directly or indirectly will be profitable. Different types of investment involve varying degrees of risk, and there can be no assurance that any specific investment will either be suitable or profitable for a client's investment portfolio. No client or prospective client should assume that any information presented serves as the receipt of or substitute for personalized investment advice from the advisor or any other investment professional.
Welcome to the Bullington Capital Report, hosted by Bill Bullington. For the next hour, you'll receive information on current market conditions and trends that could affect your financial future. If you have a question, you can participate in today's program by calling 216-901-0945. That's 216-901-0WHK. You can also reach Bill by going to his website, bullingtoncapital.com. And now, here's Bill Bullington.
Well, welcome back, everybody. In a tumultuous period, just so you know, this time of year in the stock market is historically it's been pretty volatile because you get a lot of people out on Wall Street. They're taking vacations during this time. So August actually were not one of the better performing months out of the year. Kind of surprised people, I think. September typically doesn't have a super good track record either. So, in fact, but I think I'm just going to stop there because if somebody's thinking on that short term of a basis, they're just setting themselves up to fail. You've got to look out over the next 5 and 10 years, minimally, if you think you're going to be successful in stocks. So. Now, I don't even know, the only reason I'm talking about this is because the media is blowing it out of proportion, which they always do. And if the media were a money manager, they would be out of business right now because they wouldn't have any clients. They're always reporting on stuff that's in the past. And unfortunately, you can't go back in the past and invest your money ahead of time. So I get it. It's very difficult. And if you're having difficulty handling the volatility in your account, call your advisor. Been very busy because the market has been very volatile. It's always busy when the market goes down more than 10%. People get nervous and they just check in and want to call them. That's fine. That's actually why we're here. Now, some of the bigger declines, like you look at 2022, that was pretty rough. The market took 2 years, a little over 2 years, to recover from the decline that happened during that year. And, that's pretty normal. If you're younger and you're not worried about having to take money out for retirement, then you should actually be thankful for that because you're getting more shares because the prices are lower. So every share that you purchased in the third quarter of 2022, you get a pretty big discount on. Okay, so those are still showing pretty big profits. In fact, you're profitable all the way up to looks like the beginning of 2024. Prices are still higher than they were at that point. So it hadn't fully recovered at that point. Just a little thought there. Investing is 95% mental and 5% knowing what to do. The 5% is a little like, kind of reminds me of yeast in a loaf of bread. It's a very, very small percentage of that loaf of bread, but don't leave it out. It's the same thing with the knowledge. The knowledge you need, it's actually, you can't leave it out. You need to know, what should I do? If I get a big correction like this, what do I do? And the reason that my voice sounds so calm right now is because I've been doing this a very long time, and I've gone over this in my mind over and over and over again. In fact, I've done it so many times. I don't do it nearly as many times as I did when I was younger. And I was always aware of this. I was aware that average stock price fluctuates a lot more than most people talk about. And my own opinion of that is that they don't talk about it, that the CNBC doesn't talk about it, because I know they're afraid that if the public ever came to the realization that that's just how it is, that they would actually stop watching their television show. And then their ratings go down, and it's a lot of trouble. So they just talk about what they think is going to happen next, and that's fine. That's absolutely fine. I wouldn't base any of my plans on that. Stocks are going to be very volatile. When you look at, there is a development I did want to talk about today. It's happened over the past few years. I'd say probably going back over about 10 years now. Most of the funds that are in the market are quantitative. That means they look at numbers, things like sales growth, how much is the capitalization of the entire company. That the stock market capitalization refers to the stock price times the number of shares they have outstanding. Things like that. But the bottom line is, if you're staying pretty diversified, there are some factors that do, in fact, or at least have. That's the other thing that's nuts about the stock market. Once somebody says something and makes a proclamation, market's going to do something. It's going to go a different direction and prove them wrong. So how do you make sense of that? Well, in the long run, it does make sense. It makes a lot of sense. Those companies whose sales are rising, that maintain profit margins, a lot of them will even expand the profit margin. We can talk about that in another show. But if your sales are rising and your profit margins are staying pretty stable, at some point in time, your share price will go up. Why? Well, because you're creating real value. A company that produced $500 million in profit, 10 years ago now, that's doing a little over $1 billion, has grown their profits by about 7% a year, and there's a really good chance that stock has produced at least 7% a year over that time period. Probably a little bit more, maybe a lot more, but that's a topic for another show. Anyway, in the long run, the share prices have a tendency to keep up with sales and profits in the long run. Long run, again, if you're not looking out 10 years, I think you're making a mistake. I think it's a big mistake. And people go, 10 years, that's a long time. Yeah, it is. But look at a long-term chart of the stock market. There are multiple 10-year time periods where the returns were either very low or, in some cases, they were even negative. So if you're not looking at least 10 years, you're making a mistake. You are making a mistake. And what are you going to focus on? Well, the first thing you're going to focus on is what has worked well in the past and also why. The number one mistake I see people make, mostly rookies, but some people never have somebody that will sit down with them and explain what I'm about to explain to you. And this is the thing we've been talking about this on this show. The sales growth is literally a key factor most of the time. You're going to have some outliers that do well with low sales growth. Eventually, it catches up. It's like old age. You can resist aging. Some people look a whole lot better than others. At my age, I'm not going to comment on my looks. Believe me, I wish I looked a lot younger. But the bottom line is, I don't have control over that. I do know that if I do the right things, if I'm still getting exercise and all that, I'm liable to live longer. Okay, not a guarantee, and that's why I think the stock market is so much like life in general. I mean, it's almost a mirror, microcosm, obviously, of the bigger life cycles that you see out there. There are a lot of companies out there that come up, they grow really fast when they're young. Why? Because they're young. They haven't spread out all across the country and these days across the globe. But so they've got, if they're in a good industry that's company's well managed, they'll be able to maintain a really high rate of growth for an extremely long time period. And every time I say that, somebody goes, "Well, how do you identify those in advance?" Well, that's the problem. You really can't. You can't identify those in advance, but you can identify those companies that are doing that right now, and that's all you need. If you can identify those companies that are growing faster than average right now, and you can buy a basket of them, notice them, and I'm going to avoid trying to pick one or two stocks. I've seen that work very well. I've seen more cases. I mean, the numbers are gigantic against putting all of your money on one or two stocks. I just have to mention that because there are people out there that are still doing that, and man, is that dangerous. It's just really dangerous. So I'll leave that alone. You should have somewhere at least 40 or 50 stocks if you're going to do a stock portfolio. That means you're going to put the maximum in at 2.5 to 2 to 2.5% in the stocks that you're holding. I think that's a good one. A lot of the ETFs I use have a couple hundred stocks in there, and I hold them. Some of them are so broad in nature that there's a little bit of overlap because I also like to overweight certain sectors. I really like healthcare and semiconductors. I've liked those for years now. And guess what? The semiconductors, it's mind-boggling. Their valuation is lower today than it was several years ago when I first started adding them to the accounts. That's mind-boggling. That's how fast those companies have grown. It doesn't show a whole lot of signs of slowing down, but the bottom line is, incidentally, they're also extremely volatile. The healthcare stocks, wonderful long-term track record. Last couple of years, not so much. That's not uncommon. But their growth in revenue is still amongst the highest of all industries on the planet. So at some point in time, I'm thinking, yeah, that'll probably catch up. And when it does, that's a good thing. In the meantime, I'm just going to try to be patient, watch, read, listen. If there's a really big problem, then maybe you might want to make adjustments to your portfolios. But in most cases, even those funds are well diversified in the healthcare industry. It's not just hospitals; it's hospitals, surgical supplies, specialized hospitals, all kinds of stuff. Every aspect of healthcare is covered in there because I'm a big believer in trying to get intelligent diversification. You need to be diversified, and if you don't know anything about it at all, just buy the Russell 1000. There's an ETF out there, and by the way, it's really hard to beat. They're the top 1,000 companies by market capitalization. That's the value of their stock. It's not actually the value. It's not the value of the business. It's the value of the stock today. I'll come back to that on a future show if we want to really get down and break that down. Because I am working on something. I've noticed there's a niche in the market that's not being addressed. And so I'm working on a couple of models that to try to take advantage of that. And it's a lot of work. I'm probably going to be working on this for the next few months. But hopefully within a year, I'll have all the research done that I need to do to take advantage of the opportunity that I see that's there now. And it's a good one. It's along the same lines as looking at inside the companies, looking at the industries, seeing how fast they're growing, looking at demographics, seeing where needs are popping up. There's also the technology that's changing. You know, who'd have thought that batteries would have ever been a high-tech industry? You know, you'd have gone back into the mid-90s and said, one of these days, batteries. People would have looked at you like, yeah, right. And anyway, helps to have a little bit of imagination. It also helps to read a lot. It helps to track. It is so much easier to track today with some of the tools that I have, the tools that we have as advisors at our fingertips. It's pretty nice. And I'll tell you, there's not a whole lot of difference. I mean, if you can, get a 1 or 2% increase over what an index is going to do, you're doing extremely well. I mean, that's unbelievably difficult these days. It wasn't that way a long time ago, but every time changes, and that's what happens. So anyway, I got to take a real quick commercial break here in about a minute. This is Bill Bullington. I'm right here every Saturday from 11 to 12. If you'd like to call in, 330. I'm sorry, that was started giving my office number. Let me give you my office number. If you want to call and talk to me, 330-664-0700, 330-664-0700. This is Bill Bullington, and I'll be back right after these commercial messages.
Bob Brantz here, and if you are dealing with a leaky roof, we should probably take care of that sooner rather than later, don't you think? Quick call to Sky Roofing will get it done, 440-349-6750. Look, there are a lot of roofing companies out there that want your business, but this isn't something you want to trust to a fly-by-night company. Sky Roofing is in it to stay. They've been serving Ohio homeowners like you and me for 24 years. That means they're doing it right by the roofs they repair, the roofs they replace, and the people that they serve. The pros at Sky Roofing have pledged to treat your roof like it was one of their own homes. So if your roof is in disrepair, maybe you've got some gaps in the shingles, call Sky Roofing. And if your roof has been good to you, but it's just that time that all homeowners face and you have to replace it, call Sky Roofing. Check out their work and the testimonials at the user-friendly website skyroofinginc.com. Then make that call, 440-349-6750. Call today, get a great quote, and treat your roof the way you need your roof to treat you. Sky Roofing is roofing done right.
No doubt about it, we're spending more time at home, which is the perfect time to make it more functional and beautiful. Hi, Ed Flash Ferentz here for Artistic Renovations, Northeast Ohio's premier and award-winning remodeler. Artistic did a fantastic job with our kitchen in 2016, and last year, they were back for the master bath. Oh, my word. Do yourself a favor and go to artisticreno.com. Believe me, you'll love their ideas and without question the finished product. For a virtual consultation, call 216-520-0838 or visit artisticreno.com.
You've heard the saying, all good things come to an end. Well, not always. Sometimes they just take a break. That's what's happening with Our Lady of the Wayside's car donation program after 24 years and 96,000 rides donated. Pretty amazing. Here's the story. The car lot's owners sold the property, making it impossible for car donations to be accepted at this time. According to the Wayside CEO, Terry Davis, the next right steps will be determined and communicated soon, so stay tuned. In the meantime, Terry and the entire team at the Wayside thank you for your continued support of the 450 individuals with developmental disabilities in the Wayside's care. And please take note, you can still support them by making a donation at thewayside.org. Thinking about updating your home? Well, Joyce Factory Direct specializes in replacing old, outdated windows. Proudly made right here in Cleveland, Joyce Windows features their exclusive Smart Shield high-performance glass, which means you'll be getting the most energy-efficient windows for your home directly from the factory. Customers just love how much warmer their house is and how easy their new windows operate and clean. Right now, you can save 50% on all installations. Just call to schedule a free consultation with on-the-spot pricing, 440-243-5700, or visit joycefactorydirect.com.
Well, welcome back. This is Bill Bullington. I'm here every Saturday morning from 11 to noon. You can reach out to me directly by going to my website. It's bullingtoncapital.com. Or you can email me, bill@bullingtoncapital.com. Or you can call us there, 330-664-0700. and I appreciate everybody that's listening today. And I often get some pretty good questions. Actually, I think um, a large part of my knowledge has come from the past 30 years. Can't believe I'm saying it's been 30 years, but over the past 30 years, people call in with a lot of questions. I mean, I don't think there's a whole lot that I haven't seen. Maybe if you were a billionaire, you probably had questions that I haven't seen before, but you can read about those in the Wall Street Journal. Um, it's been a really good experience. The thing is, things keep changing, and that is, you know, forever I've been saying nothing is as constant as change, because even 30 years ago, when I first started doing what I'm doing today, well, we were constantly being invited to seminars, to conferences, to discuss the latest changes in our industry or in the tax codes and how investments were going to respond to that. And so I guess I appreciate it. I like the fact that there are a lot of resources for people in my industry, and I really appreciate it. And the companies themselves are extremely proactive in trying to keep up. And so one of my favorite products over the past, I don't know, 5 or 6 years. Prior to that, I had given up on doing a lot of these contracts because the internal expenses were so high that it just didn't leave a whole lot for me, or the investor. And I mean, when I said me, I was talking about myself as an investor. So this product came out. It's got there's a chance that the investment may outperform the guarantees, but the guarantees are so high, I can't imagine that it's going to do that. And so let me give you an example. Here's somebody that's whoops, I got to go back one more on this. Somebody that is 67 years old, okay, or you're going to be 67 next year. Full Social Security age. That's why I'm using that time period, by the way, is because that's when you can get Social Security without worrying about earning money and having them take part of your Social Security back again. And so it's at age 67, and I hope it holds out until I get there. Probably won't, my luck. But anyway, so if you were turning 67, the $100,000 you went and got one of the annuity products that I'm looking at, it's going to guarantee $7,750 for the rest of your life if you decided to turn on the income in at the end of year number one. So $7,750 off of $100,000. That's pretty good. If let's say I didn't need it and I decided, I really don't need it, I'm going to see if I can go to age 70. That's when Social Security is no longer guaranteed to continue to go up each year. And this is something that's kind of funny. Okay, they guarantee that Social Security will go up each year after you turn 62. If you delay taking it, if you take it in 62, this is what you'll get. If you take it at 63, it'll go up by X percentage. They guarantee, there's a guaranteed schedule. It goes all the way out to age 70. After age 70, your life expectancy is a lot shorter than it was, when you're in your 50s or 60s. And every year that you live, that life expectancy gets a little shorter, The longer you live, the shorter your life expectancy. So they'll raise up the dollar amounts that you could get from this, and it's pretty good. Instead of someone starting at 67, say they put it in at 66 years old, 67, you could have gotten $7,750, which is still really good. But if I waited to age 70, I'm going to get $10,028. And this is in a contract. It's not like we've got a Congress voting to get rid of Social Security and break their promises. This contract is between the investor and Nationwide, and the only way Nationwide can get out of that is if you let them out of it. The I've seen companies that got into big trouble, and this is another reason when you're dealing with companies, you really want to take a look at their credit scores. There's a bunch of different agencies that do that for insurance companies, and it's one of the reasons I like Nationwide because they've been very, very, very stable, and I've got well over 30 years experience with that company on my own. So anyway, you put in $100,000 at 66, at 70, it's $10,000 a year for as long as you live. If you wanted to take it at 67, next year, 7,750. And there is a one-page website that I'm on. Actually, it's a two-page website. Well, there are two pages that you need to interact with. The one you put your age. If you're married, you can put your spouse's age, and hit enter, and it'll take you to a chart that shows you how much money you can get from those products. That's what I'm looking at right now. And this was somebody who was 66, wanted to start taking their Social Security at 67, and also wanted to see what other types of income they could generate. So this is with the guarantee behind it. 7,750 is pretty good. It's significantly higher than stocks and CDs. And what's interesting about stocks and CDs, not stocks, I mean CDs and government bonds. Better than those, the shorter term CDs and the short term government bonds are actually paying a little bit more than the longer term ones are. And I know there are a bunch of economists saying, warning, warning, that means a recession is coming. And it's actually probably already started by the time that happens, by the way. But and I get what they're saying. It's the predictive value is not like really good. Okay, things will change and they change. They don't change. They normally don't anticipate the future exactly correctly. Occasionally they'll get it, but they are typically looking at the economy for signs to tell them what to do. And the economy changes fairly frequently. So if you're trying to forecast the economy instead of watching what the economy is doing, it's kind of like trying to forecast rain in advance without having satellites. Do you remember how horrible the weather reports used to be, or their accuracy was back in the 70s? I think Ohio is like 70% of the time it was incorrect. The maybe that was actually that was really early 70s. I didn't have nearly as many satellites, I think, back then. They used a bunch of radar. Remember that? The Doppler? That is hilarious. I am aging myself tremendously on this show today. So anyway, throughout all those years, you hope you kind of learn stuff that's going to be helpful to you in retirement. One of the things that I think is incredibly helpful is knowing where interest rates are historically. Where have they been when the economies had similar characteristics to the current economy? And if you look at that, we've got a lot more help today because there are lots of websites, and I pay for a ton of research, but it's a little easier, I think. It's a little bit easier. That's why I started talking about these, because I saw what people are doing. I've witnessed for years. You have a bad year or two, and people get really upset with their investments in the stock market, no matter what they are. Doesn't matter what they're doing. They get upset and they want to start to make changes. That may be a good time to go back and review the strategy, but it's not necessarily the best time to make a change. If you review the strategy, you call your advisor up, you say, hey, I'm really worried about this. Can we talk about it? You can do it on the phone. You can do it in person. You can do it on the internet. I just want to know if I should be doing something differently. And I have people that call in and all the time, and that's what they want to know. And I would say probably half the time, because if you've done a pretty decent job up front, then there's not a whole lot that's changed in the environment, and you're probably not going to do much. You're just going to suck it up and say, yep, this is kind of how it rolls, and we're going to just gut it out. Or maybe there's a change. It might be time for a change. There may be newer opportunities that have come around since you last looked at it. Because I'll tell you, like I said, nothing is as constant as change. And in financial markets, there haven't been a ton of really big, the changes that have been made in the past few years. Really, Bitcoin. And Bitcoin's not Warren Buffett says he wouldn't invest in it, and he's not buying Bitcoin. And then he says, okay, I'm investing in some of the clearinghouses. Well, and I know I've got at least 5 clients that are listening to this that are going, hey, he's talking about me. Nope. This is something that has come from more than one. I wouldn't talk about something on my radio show that I only heard once, but when I hear it more than once, and actually in this case, when I hear it at least a dozen times, and I've looked into it at first, I was thinking, well, I knew initially that the people that will make money on this are going to be the market makers. Every time somebody logs on to their exchange to buy or sell, there's a cost to doing that, and it's the people that are making markets in that. So from that standpoint, yeah, that's probably a pretty decent investment, and because people they just love to gamble. I mean, look at Vegas. The casinos make a ton of money in Vegas, and they also make a ton of money because so many people believe that they go there and either not lose any money or make a little bit of money. You ever hear somebody come home and brag about the money they lost going to Vegas? And there are some. I mean, if you really study are extremely careful, there are professional gamblers that can go in and not lose their shirts. They can play against other people and do very well because they're professionals. But when you're going up against the house, that's a professional against a professional. Anyway, I'm going way too long on this topic. So the annuities are for people like me. I have some money that's in riskier. I shouldn't say riskier. It's more volatile. Okay, and I'm looking at some of the characteristics of the stocks that over time have done better, the strategies that have done better. And those strategies, like you would probably know already, are focusing on sales growth and profitability in size. Actually, the bigger you are, the longer you've been around in 9 out of 10 cases. If you've been around for a while, it's because you've been doing things right. Doesn't mean that you can't mess up. That's why you have a fund, and it's only a small part of one fund, because not everything is going to work out. And if you diversify, which is really easy to do today, and the diversification actually makes sense. I got one model that I'm working on I think makes a ton of sense, and it's a similar idea to what Warren Buffett does. And there's a fund out there that's doing it right now, but that fund holds 100 stocks, and it's fine. I like the fund. I've been using the fund until I get this model built. Once the model's built, I'm going to focus on those companies who are the most profitable and their profits are growing. Yeah, makes kind of sense, doesn't it? So anyway, I'll have to tell you more about that after this commercial break. This is Bill Bullington. I'm right here on 1420. Stay tuned because I'll be right back.
One day when heaven was filled with his praises. One day when sin was black as could be.
It sounds like an oxymoron, like jumbo shrimp, minor crisis, or exact estimate.
You think advanced technology plumbing is an oxymoron?
Yep, it's tech that lets us line customers' clay pipes with advanced epoxy.
Without digging up their yard.
And guarantee the results for life.
The equipment even uses advanced light wave curing and robotics.
And it really is advanced technology plumbing.
Which is a big deal when the old-fashioned method requires tearing up your yard.
Or jackhammering your driveway.
Now that's a minor crisis.
I see what you did there.
Fortunately, we can do better than an exact estimate.
You're killing me, Smalls.
We provide guaranteed upfront pricing while saving your yard.
It'll also turn a week's worth of disruption into a one-day job.
Wyatt Works Pipelining makes the alternative look positively moronic.
So choose oxymoronic instead and
consider it done at WyattWorks.com.
Do you ever find yourself saying, I need a vacation? Vacation Fixation can help. At Vacation Fixation, we specialize in all-inclusive trips and cruises to Mexico, the Caribbean, and Disney vacations. Why choose us? Our clients book through Vacation Fixation because they are frustrated with online trip brokers and timeshare scams. Whether it's a weekend getaway, a family trip, spring break, or honeymoon, Vacation Fixation will personalize a trip just for you. Want to know the hottest destinations in Cancun, Punta Cana, Jamaica, or Puerto Vallarta? Interested in room upgrades, beach reviews, or details about resort restaurants? How about finding a trip with a direct flight? At Vacation Fixation, we take all of your specific travel requests and shop our suppliers to find the best deal. What's the cost? Our suppliers pay us so you don't have to. Call 330-573-8147 for more details. Or you can visit our website at vacationfixation.com or check out the deal of the day on Facebook. Vacation Fixation.
Is it finally time to update your bathroom? Bath Planet, a division of Joyce Factory Direct, specializes in replacing and converting old showers and tubs into new, beautiful bathrooms in as little as one day. We have transformed thousands of bathrooms just like yours into a spa-like oasis that has homeowners excited to use their new bathtub or shower. Right now, all bath installations are 50% off. So call to schedule a free consultation with on-the-spot pricing. 440-243-5700 or visit JoyceFactoryDirect.com.
Well, welcome back. This is Bill Bullington. I'm here every Saturday morning from 11 to noon. If you'd like to talk to me about your own situation, you can. Just call us, 330-664-0700. Or you can go to my website. It's bullingtoncapital.com, and we will try to reach back out to you. I don't know what's been happening. We've been having trouble since the pandemic with technology, and I'm pretty sure I've talked to other people in my industry that are similar, that have similar business to mine. We've all been experiencing it. So if you're trying to log on to something and you're having difficulty, then there's a really good chance it's not you. And they don't like to take a lot of blame for a lot of this stuff, but I can tell you it's been incredibly difficult over the past couple of years, just keeping up with your technology, the passwords, user IDs, getting locked out of accounts. If you've experienced a lot more of that, so has everybody. And so again, not you. It's just the way things are right now. But it is getting better, so that part's good. They are improving. And along those lines, one of the improvements for us is, we've signed an agreement where we've got research that we didn't have access to a few months ago. And so we're going to be constructing some portfolios. I already know these work, by the way, because I've run them before. But you have to have the data to be able to do it, and you need to have to be able to backtest the data so that you can show other people what it is that you're talking about doing. And it's something that's very similar to a lot of exchange-traded funds that are focusing on growth. And so I guess I'll leave that alone. It's a lot of work, I can tell you that. And it's not going to be ready for at least 3 or 4 months. And but by the end of that, maybe somewhere around October, October, November, and I'll keep you posted. And in the meantime, I really think that as the recession starts to pick up a little speed, eventually they'll start to cut rates again, and that's so this may be a really, really good time to be taking a look at the fixed annuity market, because the interest rates, first of all, are typically a little bit higher than what bonds are. Typically, they're normally guaranteed. The one that I'm using has a guaranteed rate that if I want to decide to turn on the income, which is inevitably one of the main features of having an annuity, is to produce income for you at some point in time. The schedule that it's guaranteeing, you'd have to have returns that are really high, especially to match it on an after expenses ratio. So I'll just tell you, if you want to know more about that, if you'd like to talk about it, I can send you a link. You can go to the website. It's a nationwide website, and this tool is called a Guaranteed Income Tool. You can click on one side of it. It says, I want to see how much my savings can generate. And another side says, I know how much income I need in retirement. I like to use the savings one. I like to want to see how much my savings, and I just leave it at 100,000, mainly because it's just easier, and I can think in terms of if it were $1 million, and it's just 10 times, you just add a zero to the end of it. If it's a $500,000, it's pretty easy. You just add a zero to it, and then take half of that total. But bottom line is, it's pretty cool. You can get on there and see what you might be able to generate there. And let's see, pretty fascinating. I was just doing one here while I'm talking on the radio program. But again, I can email you the link to that. You can get on there. You can call me to talk about it. Probably the easiest thing to do, set up a phone conversation, 5 or 10 minutes. If we never put pressure on anybody, first of all, we're not allowed. Having a registered investment advisory license, you're just not allowed to do that. You have to work in people's best interests, and that's the law. So sorry about that. Just got a little distracted here for a second. But so you have to, when you're dealing with a registered investment advisor, they are legally bound to work in your best interest. So just know that. And I'd do it anyway, but I just think it makes good business sense. But my business is structured so that if you do better, so do I. If you suffer losses, my income goes down. So when your income goes down, so does mine. If it goes up, so does mine. In other words, we're in it together. What affects you affects me the same way. And I promise you, my income fluctuates a whole lot faster than yours does. But so I'm looking at doing the right thing. And I think this product really offers a lot of help. Short-term, trying to pick interest rates, what a thankless, almost incredibly, it's almost impossible to get it right. And there are tons of bond fund managers across the country that'll agree with me on that. If you only had a crystal ball that worked, you could pick out the perfect procedures and apply those, and you'd never make a mistake, or you'd never do something. And not really mistakes either. If you're buying bonds that are going to mature, as long as you're not buying 30-year bonds, that could be a mistake. But if you're buying bonds and those bonds are going to mature over the next 1, 2, or 3 years, right now those interest rates are actually higher than some of the longer-term interest rates are. If you get interest rates on long-term bonds that will meet your needs and your goals, well, you may not have to think about it for 20 or 30 years if you just wanted to lock it in. What you will have to do is ignore the fluctuations of the bond market, because you will see interest rates that go up and go down. And when they're going up, it makes you feel bad because you're locked in at a lower interest rate. When they go down, you feel really great because now you're locked in at a higher interest rate. But my suggestion there is take a look at your situation, figure out what's going to fit into your time horizon and how much risk you want to take. And that's where financial advisors come in. I have a ton of people that I've seen over the years that you ask them what's the definition of X, Y, or Z, and they know the definitions really well. But it's one thing to know what it means. It's another thing to feel how it works when your money's involved. And so it's we do have really good options, I think, for today. And I was just looking somebody at let me pull up another one of these. I want to go somebody who is 69 wants to start take advantage of the increase in the Social Security that they get each year until age 70. Then, by the way, you still get an increase. It's just not guaranteed. But all the way up to age 70, you've got an increase in the Social Security that they will give you. But after age 70, then it's just not guaranteed. But hang on a second here. So I'm going to go 69. So somebody that's going to be 70 next year, and they've been waiting to turn their Social Security on, and they're going to turn their Social Security on and take their income from their annuity at the same time. So in that case, somebody who was 69, put it in, going to wait 12 months, would be able to get $8,256. And that annual income, it's annual lifetime income is guaranteed for as long as you live. That's a big deal. If you waited another year, it goes to $9,000. Of course, the older you wait, or the longer you wait, rather, the higher it gets, and that's a really good thing. So if you decided that, hey, well, I turned 70, I know I can get $8,256 a year off my $100,000 investment I made when I was 69, but what if I give it another year? All right, well, it goes to over $9,000. So it goes up a pretty decent amount, almost 10%. Then, all right, well, how about if I waited to 72? All right, then it goes to $9,891. So you've gone from 82.56 up to 98.9. It's pretty good. And I'm sure your head's probably spinning right now because mine is just talking about it. But you can always call. You can set up a phone appointment. You can come into the office. It's not super complicated. I can email you out a link so that you can go to this page and play with it. You will have questions, most likely. That's the one thing that I really feel bad about for people that are getting close to retirement. It's complicated. I mean, it's unbelievable how much stuff you have to know now just to be able to set up the reliable streams of income, and just the sheer number of products that are out there. It's been multiplying the entire time I've been in the industry. So at any rate, if you have a question, feel free, go to bullingtoncapital.com. There's a contact us form on one of the pages there. Got our phone number there, 330-664-0700. And, I'll be glad to talk to you about this. Hopefully within the next couple weeks. This project I've been working on, it's a stock fund, or not stock fund. It's a stock portfolio that is customizable to an individual, and that's a big deal. It's really got to have a lot of technology to be able to pull that off, and that's what we're working on. I think it's going to be an excellent addition to the things that we're doing now. Help us increase returns while dropping down the risk level somewhat. That's always a good thing. And I will keep you posted on that because it's going to be a really big deal. And so I think I've got a few more minutes here. And again, if you wanted to call in Actually, you can call in today, 216-901-0945, but you'd have to call really quickly. And outside of this, the economy's actually been doing pretty good. And I'm looking at I was looking at the debt to GDP ratios of a lot of the bigger countries out there. And the United States, with all the spending that's going on, it's at 96.28. That's actually not the highest that it's ever been. It's higher than it's been in a while, but there are lots of other countries that are spending more than that. I mean, lots of them. Japan's 155%. But we'll talk a little bit more about that stuff and how that has an impact on the stock market next week. So if you want to have a conversation about that, you can call me on my office phone number. And with that, I'm going to have to sign off here. This is Bill Bullington, here every Saturday morning from 11 to noon on 1420. You guys all have a good week, good investing, and good luck.
You just caught another edition of the Bullington Capital Report, broadcasting every Saturday at 11 a.m. on AM 1420, The Answer. If you have a question and you'd like to speak to Bill personally, you can call him at 330-664-0700. That's 330-664-0700. Or online at bullingtoncapital.com. That's bullingtoncapital.com.
The preceding program has been paid for by Bullington Capital Management, LLC.